Hope you guys are doing great today. Uh, Hope you're doing excellent today.
Good
Martin Chelsea Matthews here.
morning.
So, hey, we're going to talk about something very, very important today. Important question that's on a lot of people's minds, and it is, will the economy get worse? Will it get worse? What is the Federal Reserve saying? Where's our man Jerome Powell, the money printer? What's he saying? So we're going to talk about that. Today. So if you have any questions, drop it in the comments. If you have any questions on personal financial development, we're Martin Chelsea Matthews. We go live around this time every morning just to talk to you about things happening in the economy, things happening financially. What are some things you need to be thinking about so that you can get ahead financially? Okay, ready?
I'm getting there. I'm getting the article up. I'm getting into the studio.
So for those of you who don't know, Jerome Powell is the Federal Reserve Chairman. So the Fed has, according to them, has two main jobs. One is to ensure maximum employment and to ensure price stability. Now, what do they mean by price stability? They mean that they want inflation to be at around 2% is their target, 2%. Well, that means right now inflation, recent numbers came out, it was over 8%. This is as of middle of September 2022. So what does that mean? It means they're feeling poorly at their job. They're feeling poorly at their job and what they say is their objective, even though that's not really their objective. So they control the monetary supply. And so whenever you print a lot of money, it tends to result in price inflation because people realize there's more money in the system. So when there's more money in the system, it now ends up costing. People are like, hey, there's more of these pieces of papers floating around. I need to charge more. We need to charge more because so many people have these pieces of paper. Now the supply is not as much as the demand because everybody got these more of these pieces of paper floating around because they got printed. So as a result, prices end up going up. And then when the prices go up, they try to increase interest rates to discourage you or to make it harder for you to get access to capital, which means banks will start tightening the financing rules. You need to end up having better credit score, all of these different things in order for you to get access to capital to do things like buy real estate, finance your cars, credit cards, all these different things going to be costing more. Why? Because they're trying to slow down you buying stuff by making it harder for you to get money. Whenever that slowdown happens, it tends to have an effect across the economy. Because if slowdowns happen in a business, the business is not selling more stuff, guess what happens? Business lays people off. If people get laid off, they can't pay their rent or mortgage. They get kicked out of the house. The bank forecloses on them. It ruins their credit score. They can't get access to more capital. So this has an impact. So we're going to go over some of the things that Federal Chairman Powell has said recently and what it actually means for you and your family and what steps you need to be taking so that you can get ahead financially no matter what is happening in the economy.
So I think that this is going to be a rude awakening for a lot of people who especially maybe have just entered the workforce, some younger people, teens in their 20s, who have experienced like no difficulty finding or getting or keeping a job or asking for a raise. And because everything has been so inflated, the cost of living has gone up. People expect to get paid more. And I'll tell you, even our son has said, oh, it's not like the old days, in your generation. This generation doesn't have to go above and beyond, doesn't have to work so hard. They're used to just going and getting a job, not even having to apply, getting paid more than that job probably
would normally pay somebody with their skill level.
Paid. And then showing up whenever they feel like it, working whenever they feel like it. And this is not the normal job market.
You're seeing that a lot in retail.
And if this has been your only experience, it's about to change. Let me tell you that much. And we want to help you to be prepared because it's important to know what your value is, what your exchange is, to be able to provide some stability and security through these times that are coming. So I'll tell you what, this is an article that that Martin found regarding some of these changes, and basically what was said, and kind of like decoding what they actually mean. So if you heard any of these announcements about increasing rates, and usually the government or people that work with the government, or give information to the public, they usually try to soften it, sweeten it, sugarcoat it, right? And so these are some of the words that were used and what they actually mean. So sustained period of below trend growth. That means recession. Okay. Softening of labor market conditions means rising unemployment. So you may have heard record job, record employment, record hiring, record this. First of all, it was just people returning to work after the pandemic had shut down everybody and businesses went out. And so people were coming back to the workforce. It wasn't like new jobs being created. Now, not only people returning to the workforce, maybe some people going newly into the workforce are going to find it not as easy to find a job or keep a job. Okay, so what else here? So some pain, they're talking about some pain. It may get difficult. It may get painful. It may get uncomfortable with some of these rate increases.
So why don't you read his whole statement that's up there, so that people get the full context of
Which part?
This part here.
Oh, that's not what I was going over, but okay. Reducing inflation is likely to require a sustained period of below trend growth. Moreover, there will very likely be some softening of labor market conditions. While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. These are the unfortunate costs of reducing inflation, but a failure to restore price stability would mean far greater pain. Okay, so it sounds like makes sense, right? We got to slow some things down so that we can make things work properly. But some of those things mean, what it actually means is recession, rising unemployment, lower stock prices, lower housing prices, less wealth, more joblessness, lower living standards, more bankruptcy, more poverty, and more misery.
So
sounds great. Good morning. Welcome to the day.
Yeah. So look. This is what your government, your institutions are planning to do, because they have to do that. They waited too long to try to get inflation under control. Now, in order for them to do that, I was just watching CNBC the other day, and one guy was like, "Hey, they want 1 million people to lose their jobs." So why do they want that? First of all, when that starts happening, people start to tighten their expenses. Right now, they're like, oh, people are still spending money like there's no tomorrow because they got so used to this easy money. And then now, even though prices are going up, people are still spending money. So the reason for that is people aren't hearing about people losing jobs. When they start hearing on the TV, people are losing their jobs, this company shutting down, these things, then the people start realizing, holy shit, my job could be in jeopardy. There could be an impact to me. So they start to tighten up. That's what actually helps to force the thing to happen, is people stop, they stop going out and spending. They stop going out. Like there's a new restaurant that opened near our house. And this restaurant, since it opened, it's been packed. People going there all the time. What will happen is when people start thinking, holy crap, my job's in jeopardy, they will slow down their spending. When they slow down their spending, that restaurant's less packed. I'm not talking about specifically that. I'm just giving you an example. That restaurant's less packed. When that restaurant's less packed, they're like, oh, the restaurant owner says, hey, our revenue went down. We've got all these employees. Maybe we need to start laying some people off because we got to reduce our expenses because we're not bringing in as much revenue. So when that happens, those employees get laid off and they go like, holy crap, I need to pay my bills and expenses. This is the cycle that happens. It doesn't happen immediately. Just like when they print money, it doesn't cause inflation immediately. We're telling people you'll start to see the effects 12 to 18 months from now as they were doing all of this stuff. And you're seeing that happening now. So when they're talking about it, politicians, these kinds of people, they never talk directly about these kinds of things. They say it in pretty words so that they're saying it to the people who get it. So what you need to be doing is you need to be looking at your finances. What does your overall finances look like? How do your reserves look? I talk to people every day. They're like, oh yeah, I used to have reserves, and then COVID drained my reserves, and now I'm trying to build it back up. Okay, so you should be in a hurry to build back your reserves. You should be looking at your if you're a business owner, looking at your business revenues. How stable are those revenues? If something happens in the economy where you're dependent, like if I was a restaurant owner right now, the thing I'll be looking at is, okay, how is my customer base? How can I make sure that I can, if these people tighten their spending, I can still be able to do business and do things with them, right? If I'm relying on that type of business where people going out to eat, because restaurants get hit a lot whenever there's a slowdown in the economy. One of the things people stop doing is to stop going out to eat. One of the first things to do, like, okay, we're going to slow down going out to eat. Instead of going out 2 days a week or whatever, we're going to slow down and go out once a week or 0 times a week, and we're going to make our food at home. People start doing that, and it impacts the restaurant business, and it impacts employees that work there. So for you as a business owner, be looking at how would any changes affect your business, and how do you solidify your business so that you can continue despite whatever happens in the economy.
And this is the difference between businesses that survive and thrive through difficult times and businesses that don't survive at all. Because there are businesses through the pandemic who flourished and prospered. They grew. They 2x, 3x, 4x, 10x. Mm-hmm. And so it's about having the right information, taking responsibility, and taking those actions so that you can have control no matter what the economy is doing. And we actually have a membership site, Unbreakable Finances University, short, aka UFU. And this really is a financial education platform where you can learn everything that makes up your financial house, whether it's your personal finances, your business finances, and exactly what you need to do to strengthen each one of those building blocks, each one of those areas, so that you can handle whatever comes your way financially and create the business, the life, the impact that you truly want to make. It's normally $49 a month. We're doing it right now for $20 a month, and you get access to all of our courses. Where
there's even a section on inflation. We did a whole series on inflation and talked about that.
Yeah, we're adding more and more, especially for business owners. And so you can check that out at 6buildingblocks.com/member, 6buildingblocks.com/member. Check that out. And if you have any questions, feel free to reach out. Also, let us know if you're a business owner. Are you concerned about what's happening? Are you concerned about the future of your business? Are you taking measures now? Are you looking at your workforce? What are some things that you're doing to be prepared?
Yeah, and you know the 6 areas of your finances for your household and business so that you can apply. And when downturns happen, you'll need to increase your skills. If you're an employee, you need to increase your skills. If you're a business owner, you need to increase your skill set even more, because you need to go and collect money in a marketplace where people may be contracting. So it's very important for you to have access to the right information so that you can apply that in both to your household and your business.
So check out 6buildingblocks